All right, we're into the unofficial start of the fall, end of the summer, after Labor Day. We're going to talk, and in our meeting later today, we're going to talk more about how the summer went and what to look for into the fall and how it wasn't just your typical summer market. So we come into today and it's negative. We were overwhelmingly bearish, kind of a surprise in the room, and we did head lower. Now I'm going to talk about this highlight being a low light slash highlight because I was wrong, but not wrong for long. And so if I play this thing out, you're going to see in a footprint, just rotation, you're going to see this market get weak in here, start to chop around, and show a little bit of a head fake where it rallies to '09 and then comes back down to '07. Below this like '06 area right in here starts to, for me, that if it does get back below there, it's going to get a little bearish, right? And there should be some sell stops that come in. And so I would position myself short as this market now starts coming down. I don't think yet, but at some point around 41 minutes after 8 Central, so about 10, 11 minutes after we opened. Looking to get short for a play down below 5 and maybe to test evens or '02. And what you had here was these, again, just a shelf or a ledge, might help you understand it more, right in here. So I'm thinking there's sell stops, and it starts to get aggressive and head lower, right? But then all of a sudden, let me pause it. All of a sudden, what you get is if it gets back above where you think the sell stops are, and it starts to get some gets through some selling, then your eyes got to open up to being a hell of a lot less bearish. And I had said, be careful if you're short, because the breakout is starting to breach where it started and then some selling, right? And so you kind of get that double head fake, look out above type moment, and you get back above where the breakout started. And I think it was this red edge zone selling. You start creeping back above that. Get the hell out of a short. If you're bullish, get long. But if you're short, now this is like a small loser instead of a big loser. Right there. Let me pause it. You hear her selling and getting no love. Selling and it isn't going down. So if you're short, there's nothing wrong with taking a loser, because oftentimes a small loser would have been a really big loser that could change the whole complexity of the day, the whole way the day progresses, right? By making a smart decision instead of an early bad decision, could change a lot of subsequent decisions. You got to be on top of it. A lot of times why we don't cut losers is because, number one, we say to ourselves subconsciously, what if this is going to turn around and be a winner? What if it's going to get me out for a scratch? And it's putting too much importance into it. You don't want to take a loser because you don't want to be wrong, and you're not wrong until you get out. But just think of the times that you could have saved yourself a lot of emotional capital, a lot of hard capital by just getting the hell out, and you could see this market rally. So it's about releasing your ego, your stubbornness, this isn't about arguing about sports in a bar. It doesn't matter if you're right or wrong. It shouldn't matter. And if you could stay out of this heat, you could be bearish and short, but you shouldn't stay bearish and short. It goes back to know where you're going to get out before you get in for losers. And when you see something develop that changes what you thought should have, what you think should have happened, you got to get out in here instead of having to take this thing all the way to 9, 10, and then above. Not only do you ride this loser and all the emotional capital, but then you miss the opportunity of some upside potentially. It's okay to be wrong, just not wrong for long. Cutting losers is so important when you invest or when you trade.